Today is Thursday, March 17th. Happy St. Patty's Day. I want to take a look at Whole Foods. I wrote up the stock a couple weeks ago, 2 weeks ago, looking for a breakout from base. So I want to go into it, show you how I got to it, and why I still think it's a good stock to look at for an upside breakout. So here we start with a weekly chart. This is going way back before the bull market began. And you can see the average here, that's a 40-week or 200-day moving average. And this pattern is coming right into that average right now. So this a basing pattern hitting a moving average. So that's one thing of interest. Now I'm going to come in here and draw Fibonacci retracements. Just from the whole start of the bull market to where it ended for this stock in 2013. Okay? So what do we see here? Well, the 61.8% retracement, not far from the bottom of the current range. 50% retracement, pretty good for the top of the range. And down below, check this out. Rising RSI, while prices, although still mostly sideways, have made lower lows. So that's a bullish divergence. Maybe not the best one, but it's still better than nothing. So now we're going to come back into the daily time frame. We can see the Fibonacci's here. I'm going to get rid of it just because it's kind of crowding the chart a little bit. Actually, I need to get rid of it that way. There we go. Okay, let's zoom in a little bit. You can see, whatever trend line was here, broken. But let's do it this way. If we draw the trend line here, clearly broken, but not a whole lot of information since it's been going sideways. What if we now put it here? Another breakout possibility. Here's one more thing. If we put a third line here, and I'm going to go back and put in the others, what we have here is a series of fan lines. And what that is a gradual rolling over of a trend, in this case to the upside. So when the third trend line breaks, you get your buy signal. And look what else is happening at that third trend line. We'll put in the resistance level. Again, remember this was the 50% retracement of the bull market that preceded this decline. There we go. So here we're establishing a pretty good zone right around 35, maybe a little bit under, where a breakout would be a pretty good signal to buy. So it's pretty simple analysis, not much to it, waiting for a base to break out to the upside. If it doesn't break out, we don't buy. And if it does break out and it fails, well, we'll know pretty quickly that it failed and we'll get out with minimal loss. Of course, there's nothing stopping this thing from going down to the bottom of the range, below 30, but we're not playing for that. If you have other things you want to look at to play a very short-term trend, perhaps you want to draw a trend line here, you might actually argue that that is broken to the downside. But in the bigger picture, I think the stock is basing and just biding its time until it breaks out to the upside.